Welcome to the latest episode of our podcast series for financial advisors. Today's episode is Growth from Practice to Enterprise, the evolution of an ex-Wirehouse advisor's $3 billion business. It's a conversation with Joel Guth, founder and CEO of Gryphon Financial Partners. I'm Louis Diamond, and this is the Diamond Podcast for Financial Advisors.
At Diamond Consultants, our mission is to help advisors live their best business life. We want every elite advisor to find exactly the right place for their business and their clients to thrive, whether it's at a wirehouse, a regional, boutique, or independent firm. As the industry's leading recruiters and consultants, we've transitioned more than $250 billion in assets under management in the past decade, and each year, 25% of transitioning advisors who manage $1 billion or more are our clients. If you'd like to talk, please feel free to give us a call at 908-879-1002. Are you a financial advisor who's curious about whether you're in the best place to serve clients, or if there might be a better way to optimize your business for the future? Should I Stay or Should I Go is a new book that serves as a self-guided journey, walking you through the key steps that Diamond Consultants takes with our advisor clients, whether considering change or not. Visit diamond-consultants.com/thebook to learn more.
One of the most common questions we hear is, what does it really take to scale a business from a successful practice into a fully formed enterprise? It's not just about growth. It's about clarity, intention, and evolving your mindset from advisor to leader. That's exactly what this episode is about. I'm joined by Joel Guth, who made the leap from Morgan Stanley in 2014 to launch Gryphon Financial Partners under the Hightower umbrella. But a few years in, Joel realized something important. He wanted even more control and greater access to products outside of the Hightower ecosystem. So in 2017, he and his team stepped away from Hightower to become fully independent, a move that reflected a deeper commitment to the kind of firm they wanted to build. Since then, Gryphon has grown to manage more than $3 billion in client assets with a structure, culture, and leadership model that reflects the journey from individual advisor to CEO. In this episode, Joel shares what the evolution has looked like, including the challenges of scaling, the importance of client segmentation, how his team approaches problem solving, and what it really means to build a business that's never for sale. Whether you're early in your journey or thinking about what comes next, Joel offers a thoughtful, real-world look at what it takes to grow with purpose and how removing the right obstacles can open up your firm's potential. Let's dive in. Joel, thanks so much for joining us today.
Thanks for having me.
Very good. Let's just jump in. Why don't you tell us about your journey that led you into the wealth management business and what drew you in the first place?
This is a goofy story, but lucky. I went to school in upstate New York. I'd taken a job working for JP Morgan in Manhattan, which is really what I wanted to do. And then through some tragic family circumstances, needed to come home, and home was back to Ohio. So came back, found a job working for a fellow Cornell alum who owned a couple businesses, and he took me in and helped me learn about business. And I did some marketing things for him and a couple of his companies. And then he decided to sell, and I needed a job, and literally stumbled into a job at Merrill Lynch. And I didn't realize it was a sales job. I thought, man, I'm a smart guy, Ivy League diploma. They're going to give me clients. This will be great. I love the markets. I showed up and realized very quickly it was, here's a phone to phone, get after it, find clients. So it was just a stroke of great luck. And then I loved it, enjoyed doing it, happened to be fairly good at it. And it just went from there.
Everything happens for a reason. I feel like a lot of people get into this industry not realizing that you got to really build up your own client base, and it's not what it seems like on TV. But you'd probably agree, once you start getting success and the flywheel starts going, there's no better business to be in.
I would completely agree.
Amazing. Well, we'll fast forward quite a bit from your early days to today. Just for some context, can you give us a snapshot of your firm today, what your team looks like, typical clients you serve, and just anything about the overall firm that would help our audience really understand who you are and what you're building?
Yeah, so we left Morgan Stanley in 2014 and opened the office in Columbus, which is still our main office. We do have an office in Toledo, Ohio, and then we have an office in Cincinnati. We've got 12 full-time advisors, I think 31 people total. And clients are really bifurcated into two areas. We have a multifamily office that is 20 million and up, and then wealth management, which is a million to 20 million.
And how big's the firm as far as total assets, if you're able to share?
I think we're right around 3 billion today. And it depends because we do a lot of consulting work where we're not charging on assets that are held in-house. And so we would argue bigger, but it's easier in terms of the regulatory environment to just list what we have in-house.
Yeah, that makes sense. And how long have you done the segmentation approach? I really like that you have two very clear segments. So how long have you been doing it, and what's the difference in the services that the 20 million and up clients are getting versus, we'll say, the $3 to $10 million clients are getting?
Yeah, we really kind of made it formal maybe 24 months ago. Before that, we had treated it differently in-house, but as we continued to grow, I think we needed a more clear kind of definition for clients. And really, the two biggest differences are the products that we're offering to our multifamily offices with a lot of private real estate, private debt, private equity, and then just some of the services that are needed when you have that kind of wealth and the complexity, whether it's bill pay, whether it's concierge travel. And so I really think it comes down to the product offering in the service suite.
Very interesting. And do you price it differently, or it scales? Because if you have 25 million that you're managing, obviously you're going to make more on them. So is it like a flat fee structure? You mentioned some consulting work you do, or are both doing fairly similar fees?
Both have AUM fees. The difference, and this would be predominantly in the multifamily office space, but some of the higher net worth wealth management clients as well. If we're working on a project, helping them sell their company, we're doing really complex, extensive estate planning, we will a lot of times have some sort of retainer or consulting fee in addition to the A fee. And then as we get projects knocked off the to-do list, that consulting fee will come down over a period of time as we get things done. So it really, in the multifamily office space, it's typically a combination of some retainer-based work as well as the A fee.
Very interesting. I'm always intrigued by the different strategies that advisors use to price their clients. Have you seen that being able to charge a consulting fee where in most firms out there, that's not even an option? Do you think that's helped your growth?
I really think it has. And I will tell you, the biggest thing we've seen is our closing ratio has gone up when we're in competitive situations because it's so much more logical to a client to understand that they may pay us more in the first 18 months as we onboard them, as we get some problems solved. And then that fee will drop or go away as we move into a regular cadence. I really just think it has enhanced our professionalism. We're able to articulate exactly what we're going to do for the fee, what we're not going to do for the fee, and then have a discussion around if something comes back into play later on, then we can add that service back in for a fee. I just think that clients like the transparency and they like the logical pricing of understanding what they're getting for the dollar.
Makes sense. And yeah, not to keep harping on this topic because we have a lot more to talk about, but what are the specific services that in a multifamily office client that's early on in their tenure working with you, that's still paying the consulting fee? Like, what are they getting differently in the first 18 months than beyond that?
A lot of our clients are money in motion, whether it's a C-suite executive stepping down or whether it's a business owner monetizing at some level. So it's usually around succession planning, extensive estate planning, balance sheet creation, really doing an extensive cash flow modeling so we understand what we're working with in terms of what kind of estate planning we need to do and address. And a lot of those, once you've done them once, you may update them, but the updates are much less time intensive. So it really is around that initial planning and that liquidity event.
Makes sense. I also find too that if someone's paying expressly for the service, they're probably more likely to buy into the recommendations and be more collaborative because
Absolutely.
ultimately they're paying for it. Not that if you're paying an A fee, of course you're still paying something. Let's set it and forget it and you just take it for granted. But if there's a direct fee you're paying, my guess is you have very willing and able clients who really want to participate and really leaning into your advice.
Absolutely.
Love it. So let's talk a little bit about your time at Morgan Stanley. You're there for quite a long period of time. I'd love to just hear what your experience was like there and What'd you learn about serving clients at a high level, especially the ultra high net worth?
This sounds funny because we left, but we had a phenomenal experience. And just as maybe for some context, as I refer to we, my business partner, Kathy, and I have been together almost 30 years. So when I say we, I mean the two of us, but we had a phenomenal experience at Morgan, met great people, still have dear friends. In fact, the manager who hired us actually helped us find Hightower and helped us set Gryphon up. So we had no hard feelings when we left Morgan. I think they've got a great firm. I think they've got a great business model. It just didn't fit for what we wanted to do. We wanted a little more freedom and a little more flexibility because as we learned the high net worth space, and we really learned it with them and their private wealth management people, we just felt like we could get closer to the client and be more solution based if we were more boutique-y. So we really had a great experience at Morgan and have nothing bad to say about the firm.
Yeah. Sometimes just your goals and what you're trying to do for clients begin to diverge from a firm. And the great thing about today, and even back in 2014, when you took the business to Hightower, was there's just a lot of different ways you can do that. You don't have to just go out and start your own firm like you ultimately did. There's halfway points and checkpoints along the way to help you achieve those goals. So yeah, let's talk about the move to Hightower. So in 2014, Hightower looked a lot different than it does today. Then they were recruiting advisors with a mix of cash and stock to become employees and partners at the firm versus today where they're acquisitive and buying RIAs and bringing them under the Hightower umbrella. So what drove you to Hightower back in 2013 and 2014 when you ultimately made the move?
So again, I mentioned the gentleman who hired us, who had always been a great mentor, really helped us start to look at some of the other platform providers. And we realized quickly what we didn't know about running a business, setting up a business. We knew how to run a client base. And at that time, Hightower had two business models, and it really was just a platform provider. They had the partner model, or they had a model that you could rent the platform in essence. And Kath and I chose to do that. And we had some great offers from some firms that we had competed with in the high net worth space for years, but we felt like we could control culture if we owned it. That's why we didn't go the partner route at Hightower. And that was really important to us to just control what the firm felt like, not just externally, but internally for our teammates as well.
I mean, we see it not all the time, but more frequently now, like entrepreneurial advisors turning down the big check to realize their dream and build something. But I'd say you were definitely a little bit more of an outlier back in 2014, where I think advisor mindset was much more then around if I move, I'm going to get paid and get a big deal. So how did you and Kathy reconcile turning down major checks in order to, in essence, come out of pocket to start a business?
It wasn't easy. And I'll never forget when my wife, and we've been together 29 years. So
Congrats.
I've been fortunate to have two phenomenal partners with me for kind of all of my adulthood. But I remember she laughed one time looking at some of the things we turned down, and not only some of the things we left at Morgan, but she goes, "Boy, honey, I hope you're right." And it was a gut check. But Kath and I just really, and this is really before private equity moved in to our space and made valuations real. But we just really believed that we could build something longer term that had just true value, not just for the two of us, but for our teammates and a way to reward our teammates. And the goal was really never to sell and monetize. It's always been, and it still is, to build something that's going to outlast the two of us. Cass got two adult kids, don't know where they will go. I've got three kids, don't know where they will end up and if they have an interest, but we certainly have a young group of teammates who do have an interest in continuing. And it was really just building the true value that we thought, and hopefully we will get compensated for.
Well said. Yeah, I think that's right. The valuations were probably like half of what they are now in 2014. Like they're still meaningful and there's still a lot of press for teams leaving a wirehouse, going independent and selling for big dollars. But that dynamic has shifted in a major way. So I guess you were prescient in your thinking. So then after a couple of years running your business as independent contractors at Hightower, you ultimately decided to leave and launch your own independent RIA. Why was that the right step at that point in time?
And again, we had a great experience with Hightower, met great people we still stay in touch with today. And the move was really just, we wanted to do some things on the product offering side that Hightower just really couldn't do. And we totally understood why they couldn't. I'll give you an example in private real estate. And we've had opportunities that are very local in nature. And that just wasn't something that Hightower was wanting to, and honestly probably shouldn't have pursued because of the size. We were able to pursue that and get great deals, and has turned out to be a great value to our clients. And so again, it was just, we wanted a little more flexibility to be responsive to our client base, just wherever they needed us to be and go.
So, as you're thinking about the client experience and what Gryphon's able to do for clients today versus when you're in the Wirehouse world, and then when you're on Hightower's version of independence, and now owning and operating your own RIA firm, what do you think are the biggest differences between the three models?
I know it's a cliche and everybody says open architecture, but it really is open architecture, but it's broader than just thinking about what money managers you can offer or hire or how you run money. It really is looking at someone's balance sheet, and if they need debt options, having complete flexibility to go out and price that deal for them at multiple banks, make the banks compete with each other. I mean, just the idea that we have no vested interest in any solution, and that the entire focus is on how do we make that client's life better. In the high net worth space, I don't know how you look a client in the face and say, I'm doing it best for you if I'm working from a menu of anything, whether it's custody options, whether it's products, whether it's debt offerings. I just think in today's world where technology has made it so easy to have multiple custodians and to be able to create balance sheets that have multiple inputs, I just think we had to have that kind of open architecture. And it's just different than what we talked about at Morgan being open architecture. It really is just looking at someone's balance sheet and saying, okay, how do we solve for the problems, and really just don't care who is the provider of that solution.
What would you say to an advisor? Like, we hear this all the time. You have a large team at a wirehouse who serves very large and complex clients, and they feel like they get relationship pricing from the firm. And that a key selling point is, if you come work with us at XYZ firm, you'll get preferential access and preferential rates because of the relationship with the firm. How would you push back against that? Or do you think there's some merit to that argument?
I'm sure that's true if the firm you're considering is 100 million, 300 million, or a smaller firm. But in our experience, when you get to the $1.5 billion to $2 billion mark, you're able to access what you want to access, and you're able to get effective pricing. So we have not seen that been a problem. And candidly, if we're in a competitive situation, we just say, look, give us an example of either a product offering we can't access, or give us an example of a product offering where the fee is substantially lower because you're at a firm that has $500 billion. We just haven't run into that problem. And I think as Fidelity continues to evolve and as Schwab continues to evolve, they in effect use their size and scale to help us get pricing levels that we need.
Well said. How about the vision of Gryphon? What was your vision like when you launched the business for the first time on the Hightower platform? And how has it changed and evolved since inception?
Our vision was really just to be as close to our customer base as we can. We didn't call it that. We weren't smart enough to coin that term, but that's what we wanted to be, right? Whenever money or a decision or a thought came across, we wanted to be the people that you called. We wanted to be your closest, most trusted advisor. And we were that for the families that trusted us and came with us from Morgan. And that vision hasn't changed. Our mission is make people's lives better. And when we say that, we mean our clients, we mean our teammates, our families, our communities. And that vision just hasn't changed. And we hire people that are passionate about helping people in the way that they can, whether that's financial, whether it's helping somebody think about a business. Kath has gone and had some discussions around prenuptial planning, just because we were the ones the family trusted to go have that discussion. So it's always just been as close as we can to our customers and be responsive to what they need, and then figure out a way to make it happen.
Very cool. Yeah, I mean, it's amazing how you think about maybe the cocktail napkin or the whiteboard that you had when you started the firm. And it's probably pretty gratifying to see that the vision that you set out to build upon is still intact. Like, you probably never imagined the firm to be as large as it is today and having a family office segment as an example. But I think it's really cool. Like, I feel like most of the time the vision for the most part stays intact, but I've seen a lot of firms change it. Nothing wrong with that. but it's refreshing to hear that everything you set out to build, you've accomplished and then some.
Well, we're working on it, but thank you.
So I got this from your website. You talk on your website about objectivity, independence, and the ability to navigate complex client transitions. I think some of those things are what many firms would say. Like most independent RIAs would talk about objectivity and independence. So what do you believe really sets your firm apart from others in the space, whether they're your wirehouse competitors, they're other RIAs, other independent firms, et cetera?
Yeah. And again, I mean, I think everybody says it. And so I'll maybe try to give a little more detail, but it's the culture in our people. And so we really try to create a culture where everybody that works at Gryphon realizes why we show up every day, who pays our bills. And we've gone to great lengths to educate our entire team around our financials, how we make money, how we lose money, how important it is when a client hires us, how detrimental it could be to a client firing us. And if we create that culture where they just want to take care of the client and their family and solve their problems, I had a great conversation with an incredibly successful person in the asset management business. And I said, how did you get here? He goes, just do the work that's on your plate to the best of your ability and solve problems for clients. The rest will take care of itself.
I
And
love
so we've just resonated with that. And so I think we've been fortunate to find and keep phenomenal people that are bright, that are great problem solvers. And I think that culture of just solve the problem. And we stole a line from a firm we knew that was where people see problems, see the opportunity. And so we just really try to focus on when a client needs something, don't say no. Figure out how we make it a yes. Figure out how we can solve it. Figure out how we push other providers to think outside the box so that we can end up with a solution that helps that family move closer to their goals.
Hmm. Very interesting. So when you launched Gryphon, you mentioned you have about 31 or so professionals, 12 advisors. How have you thought about hiring? What was the pathway of the types of roles you hired? And as you've added advisors, are they bringing books with them? Are they more servicing and support advisors? How have you scaled the headcount and thought about that?
So, and by no means do we have it right. Hiring, I think, is the toughest thing you do when you have your own company, and finding the right people and defining the roles and finding people that meet those roles. This sounds harsh, I guess, but we look for really smart people. If someone is smart, we don't really care about what your background was, what your major was. If you are smart, can solve problems, and those are the kind of people we want to hire, because we can teach you our industry. What we can't teach you to do is be a problem solver. I think that's a really hard skill to develop or learn. I hate to say it, but I think you either have it or you don't. So we look for problem solvers, and we look for examples of, when did you solve problems? It could be as mundane, hiring a young person, the conflict between roommates, which we all went through in college, and the one who figured out how to solve it. Or it could be somebody who came from a business background who can give you real business examples of problem solving. And then on the advisors, most of them have brought a book. We have added a few support advisors as we've grown, and some of our key advisors have grown and they need to create scale. But again, the things we look for is, first and foremost, we want you to be planning based. And then again, not to beat a dead horse, but just be problem solution oriented. How are you going to solve problems? What kind of problems have you solved? Give us examples of where you've made your clients' lives better.
Very interesting. Honestly, I don't look at it as beating a dead horse, because you've mentioned multiple times the need to solve problems. So that's very clear. It's central to the value proposition, and you have to keep reinforcing the culture of the company you want to build. So I really like it. Can you talk a little bit about your organic growth strategy? So you've brought on some advisors with books, which I would put in the more inorganic category. And we'll talk about it in a little bit. I know a big part of the growth story going forward is acquisitions or bringing over advisors with larger businesses. But how do you bring in new clients absent recruiting and acquisitions?
So we focus two areas. One, centers of influence, and we've been fortunate. We forged a great partnership with a regional accounting firm here in town that wasn't in the wealth management space. Their footprint matches our footprint in terms of cities, and they match us in terms of they're not going to be for sale. So that's been a great organic growth, and we have worked very closely with their partners so they understand what we do, how we deliver value, how we can help their clients. And then the second thing is just client referrals. And again, it goes back to if you take care of the work that's on your plate today and you deliver great results and great service, people will want you to meet their friends. They're going to want to bring people to you to help their friends to have an experience. And so it really is focused around those two things, client referrals and then our strategic partnership with the accounting firm.
I think the partnership with the CPA firm, I mean, that's a tried and true method to grow a business. But I see a lot of advisors, they talk about having relationships with CPAs, but it doesn't really bear much fruit. How'd you turn this one accounting firm into a major part of your growth story? Is it a revenue share agreement? Is it something else? Is it just a messaging?
No, we have a revenue sharing agreement. And I think that's obviously a part of it. Compensation drives behavior. I'm not going to kid myself and think it doesn't. But we really got lucky. Their culture fits our culture. And when we started down this path and just started to get to know each other, and then our key people met their key people, we were singing from the same page in the hymnal, right? They are very client focused. They are problem identifiers, solution creators, and that just resonated. And so we've really, I think it's gone beyond the revenue share because the value system of their firm and our firm is just so similar.
Makes sense. Yeah, it's probably too, it's quality over quantity. Like better to have one really good relationship rather than having 10 that are just like, they don't really do much because you can't really focus and spend time on cultivating the relationship in the same way.
Exactly.
You mentioned, this is going to be a later question, but I'll pull on the thread that you brought up. You said that this accounting firm and Gryphon both have the philosophy that we're not, never will be for sale. I think that's such an interesting concept because we started talking early on about where valuations are. I'm sure you get 15 phone calls and cold emails a day from firms wanting to pay crazy numbers for your business. So how do you think about the longevity of Gryphon when there's so much consolidation and capital coming into the space?
For us, and we've obviously, we've had a couple offers that we took a little bit more serious years ago when we were a little younger, and it was unbelievably flattering and attractive. And we thought about it, but really, and I'll give Kathy a lot of credit for kind of being our guiding light in this area. It's not what our value system is. If we're going to talk to our clients about handling multiple generations of their wealth, they're buying our value system and our integrity as much as they're buying our services and our products. And the moment we lose control of the firm, we lose control of that value system. And it's not just for our clients, but we talk about when we hire teammates that we want this to be the last job you have. Well, we can't control that if we give up majority ownership in the firm. Those teammates are going to be treated the way the new owner, and they have the right to treat them that way. And so it has never resonated with us that we can fulfill the bigger mission of Gryphon and what Kath and I set out to do with our professional lives if we aren't in control of that destiny.
So obviously you hope to work for as many years as you'd like to, where it's still fun and fresh and you're able enough to do it. So when you and Kathy ultimately decide to retire and pursue other life ambitions, how do you think about selling equity or transferring it to the next generation?
So, I mean, hopefully, I think we both hope that one or more of our children will have an interest at some point. That would be phenomenal. I think we do align in that we're not going to force that or try to drive that. It really needs to be something they want. We have a handful of very talented young people today who want to own it and want that transition. So I think at first is just identifying people that want it, and then two, that we believe can do it. And I think this from our industry. One of the greatest things about our industry is you can wind down in stages. I have a good friend who's leaving a law firm, and we were having dinner and we were talking about at his age, in his mid 60s, the wisdom that law firm gives up by dismissing these older partners when they hit 65 to me is mind boggling, right? So I think Kath and I both see ourselves, as long as we're able to be involved in the firm, mentoring, coaching people, and helping the next generation of leadership just avoid the pitfalls that we made.
Very interesting. I like it. It's gratifying to hear. I'm always a little bit cynical when I hear firms say we're never going to sell, because you never know what life throws you. And as the value of firms like yours continue to accelerate in value, it becomes harder and more expensive for junior folks to buy in. But I feel like you can never project the future, but it's refreshing to hear that, at least for now, subject to change, of course, it's not the focus to sell the firm. Like, you want to keep it going, bring in family members potentially, and really stay in lockstep with your clients.
Yeah, and we've started to think about how we do that. how it can impact our families, what are our options so that we're never in that situation to force a sale because of the economics. So hopefully it'll work out. I mean, that certainly is the intent.
Speaking of business owners, it's a big focus for your firm. So when you have entrepreneur clients who are selling their business, what's your role in the process? And then after they sell, how do you help in designing what comes next for them?
So we can engage at any stage. Ideally, we'd love to get in a couple years before they're really serious about exiting, because I think that's where we can make the most value, both from an economic standpoint, but also from a family standpoint. But we will engage at any kind of point in that curve that they're exiting, including, hey, I've exited and here's my money. I think our biggest value add, or what we do the best for them, is, I mean, there's a lot of great firms in terms of running money. We think we do it well. We do it better than most, but there's a lot of really good firms when it comes to running money. I think there's a lot of good firms when it comes to planning. But I think the thing that we've learned, having done this 60 plus times with families, exit companies, is really engage the conversation about what life is going to look like going forward. I mean, even as simple as you've been working 12-hour days, I'm sure the first 6 months are going to be phenomenal. But on day 181, tell me what your day looks like. And we've had some great conversations, some funny conversations. Just a couple of weeks ago, one of our clients who's getting ready to sell, he said, well, we're going to get up and go work out together. And his wife looked at him and goes, no, we're not. I work out with my girlfriends. I'm not going to change that, right? And so I think we as an industry think a lot about the big macro issues. But if you're a person, a man or woman who's built a business and you're driven and you've worked 12 hours a day, having a blank calendar is not going to be fulfilling after a while. And so getting into the kind of minutia about what life's going to look like, what's the next thing that's going to drive you. I think we sometimes think businesses are successful because the owner wanted money. I don't buy that. I think the owner wanted to make a difference. The owner was passionate about a market. He or she was passionate about customers. And that was fulfilling. And then as you grow, and we've started to experience some of this with our team, the fulfillment of watching some of the younger people grow and you mentor them. When you lose that, you lose a piece of who you are and what drives you. And so how are we going to find that? How are we going to get that back? Because people who build successful businesses just don't sit on the front porch in a rocking chair very well.
I think that's right. And it's so interesting because, like, you think of a financial advisor, they're the one who is helping manage portfolios, they're doing financial plans. Like, I think a lot of people don't think about the emotional side and the life coaching. And just like if you're selling a business, I imagine it's a very lonely process. Like, probably many of the business owners' friends aren't in the same position, or they're not willing to bring them under the tent or be vulnerable with them. So if you have the ability to connect with people and you share your experience and connect with empathy, I feel like that's almost a more valuable service and probably a more meaningful service to the client than returning 10% on their portfolio last year.
I would agree completely. There's so many firms that do it well. There's so many opinions about how to do it. And these are families who don't need excess returns, right? Yeah, of course they want them, but they've created a big bucket of wealth. And it's not really about that money anymore. And you can have all the money in the world, but if you can't find what's going to fulfill you in that next chapter of your life, it's going to be a rough time. And you think about it, it's heartbreaking to think about somebody who was creative enough, talented enough, and driven enough to create a business worth 30, 40, $50 million. You don't want to see that person go off into the sunset and not be happy in the rest of their time here.
Spot on. How about on the multi-generational side? So I saw also on your website that multi-generational planning is a pretty big focus of your firm. What are some ways you engage the next generation of clients? Since I see it all the time, most firms and advisors focus on the older generation, the one that has the big dollars, the one who controls the wealth. But then when they pass, most clients find a new advisor. So how are you trying to get in front of that?
So I think we've done a couple things. And again, I will give 98% of the credit to Kath. It was her brainchild to say, hey, instead of getting them in a room and lecturing them and giving them presentations about private equity and philanthropy, let's really make it a focus to engage them when they have events. So you think about, when do you think about money? Well, you think about money when you have your first job and you're going to make 401k selections. You think about money when you get married. You think about money when you buy your first home. And even if the family is going to be the bank, helping them understand why the family's the bank and how a bank works and what a mortgage would look like, so that when they go have discussions with their friends who don't come from that background, they don't feel different. They don't feel ostracized because they didn't go through the process of going and getting a mortgage. And then when you have kids, how do you save for college? Even if the family's going to pay for college, what are the options, and why is the family paying for college? So I think it's been engaging them when they've had events that would naturally allow them to have a curiosity about wealth. And then the second thing that we did is we brought in a great young advisor who works with most of our multifamily office, Next Gen. It works with mom and dad as well, but he's their age. And so he can engage them and talk to them in a way that Kathy and I at 55 really can't, and nor do they want us to, right? We're their parent advisor. They want somebody their age who's going through the same things in life, who's raising kids, who's working 60 hours a week. So I think those two things have really allowed us to approach it in a different way. And yes, you still have to do the educational pieces, and you do the family meetings, and you do all of that. But to really build the relationship, you need to engage them in their life, not the life of the family as a macro.
I think that's spot on. That was a great answer. It was very specific. And I think that's exactly right. Like, yeah, families work with an advisor. And if you're the next generation, like, you don't feel like you have ownership over the relationship. So if you have the ability to cultivate a relationship with someone who's more your peer, and now they're your guy or your gal, I think that's huge. In addition to what you said, like finding creative ways to engage them on topics when it's actually relevant to them, not just dumping information on them, but when it's relevant and they're engaged in the process, you're there to support them and help them explore the curiosity. A couple more questions for you. These are going to be somewhat random, call it more of a grab bag of sorts. But what's been the biggest surprise, let's say one good and one bad, about launching your own RIA?
Well, I'll go with the bad first. I think it's two things. I think one is when we worked for 18 years inside big firms, and we thought we ran a business. We had no clue what running a business meant. And we knew nothing about running a business. And I will say two things. One, if we hadn't connected with Hightower, we would have been in trouble because of all of the little things, silly things like where do you buy phones and office furniture, and how do you lay out an office space? What is it supposed to look like? We had no clue. So I think that was shocking to both Kath and I, that how little we really knew about opening and running a business. And the second thing that was a blessing is Kath and I have a great partnership, and she did 90% of the internal stuff, which freed me up to go transition clients and do all of that. So I think one of the things we always tell people who are going to leave is, hey, make sure somebody on your team wants to run the business. They want to do the day-to-day. The copier doesn't work. The internet is down. My email isn't working. That can cripple you as quickly as not moving your clients can cripple you. So I think that was the bad. I think the good is I don't think either of us realized how much we would enjoy the ability to impact our teammates and bringing in people and seeing them grow and seeing them flourish financially and be able to do things with their family and buy homes. I don't think we had the concept how much we would really enjoy that and how fulfilling that would be for us.
Great answer. How about the shift from being, like you said, you thought you were running a business within a wirehouse, but you really weren't. So how did you prepare yourself to become a CEO? Was there books you read? Was it just figuring out as you went, fake it till you make it? Were there coaches you worked with, et cetera?
So I will say that's probably been the hardest transition I've ever had to make in my life. If you're a great advisor, I'm not trying to be arrogant, but I think I was a very good advisor. You're used to being the driver, the doer, and things get done based on your ability and your execution, or they don't get done. And so when you transition, for me at least, where you've had to get things done through other people and you're no longer the doer day to day, that's a really tough transition, or at least it was for me. And again, I've been blessed. I've had great mentors, people that have taken an interest in me. I've got a couple clients, one in particular who's an incredibly successful CEO of a public company. And he and I talk all the time. How should I be spending my time? What should I be doing? Where do I add the most value? Where am I getting in the way? And so I think it's a combination of him. We added a great teammate from US Bank who was a senior management at US Bank, who's really helped us think about how we think more institutional as we grow. How do we think about that? And he's been a great kind of sounding board for me. And then again, Kathy, she has a tagline that I quote all the time. If we're going to get where we want, I have to be a different leader tomorrow than I am today. And so it's really just been great people in my life that have been willing to help.
That's terrific. Do you still manage your own book today, or have you transitioned away from that to focus on running the firm?
So I still have client responsibility. And one of the things that we've debated internally, and even as we've grown, as our service team has grown, I think everybody in a leadership position needs to have facing client responsibility because it makes you eat what we cook, right? And you have to eat it in front of that person. And so I still have a handful of clients that I work with, Kathy and Michael, on weekly, monthly, quarterly. And I don't really ever want to give that up because I think it makes me a better leader of the firm to have those discussions and stay sharp as to what's going on with our families.
Yeah, I agree. I feel the same way with running our business. There's certainly opportunity to do other things, but it's fun and gratifying to have your hand in the process. But I also find it's the best way to be able to teach people and train people and also just keep in front of trends. If you're out of the trenches, it's hard to do that. But everyone kind of has their own viewpoint there. Let's talk a little bit about recruiting. So I think the way that we got hooked up and we met each other was Gryphon in its next phase or next iteration is trying to be a more prolific recruiter of experienced advisors with books of business. Can you talk a little bit about what's the pitch? Why would someone come and join you versus starting their own or going to a multitude of other firms that are out there?
So I think I'll take the first one. Starting your own, again, one of my partners, Randy, and I had a long discussion with a team in Indianapolis this week. And my point was, guys, running the business is a lot harder than anybody thinks. And one of you has got to accept that you're going to spend hours a week on the business, not in front of clients, not growing, but really just running the day-to-day. I think if you want to open your own shop, I mean, we did, so I would never say that's bad for anyone, but just be aware of the burden, and it's a burden that the business day-to-day puts on you. And most advisors, me included, that's not what I love to do. It's not what I'm great at. And so we've had friends that have left and started their own shops that just didn't go great. And it's because of that basic infrastructure of running the day-to-day. So I think that's the first thing. If you want to go on your own, have a strategy for how you're going to run the business. And then why do you join us? I think it's a couple things. It's culture more than anything, the way we view our teammates, the way we treat each other, the value system, how we view our clients. One of the things we tell every one of our teammates is if you think about the traditional pyramid in a big firm, the CEO and management leadership are at the top of the pyramid. The advisors or maybe the clients are in the middle of the pyramid. And then the advisors or the clients, wherever they fit, you're either middle or the bottom of the pyramid, which doesn't make sense to me, right? The top of the pyramid should be clients. Everything should be about how do we take care of them? How do we service them? How do we make their life better? The leadership of the firm should be focused on the advisory teams. How do we make them better, quicker, faster, more efficient? And if we're not removing obstacles from the men and women who work for us, then we're not earning what we get paid. Because our job should be how do we help them get better and scale and use technology to be more efficient? And so I think it really is the culture of it's servant leadership. We're here to make our teammates better. And if we do that, our teammates are going to make our clients better.
Great answer again. You're on fire here. 2 more questions for you. These will be more forward-looking. What's one area of innovation or transformation in wealth management that you're really excited about?
Again, everybody says it, but I think technology, we're working hard with some of the AI services that take notes, automate your tasks so that an advisor can go into a meeting, it automatically uploads to the CRM all of the notes, it assigns the tasks. Because if we can make our best people more efficient and free up time that they can go enjoy and live their lives, and then time that they can serve more clients, then we've done what we wanted to do, right? So if we start with our mission, which is make people's lives better, the subset of that is we want to make more people's lives better. And I think technology is just going to enhance how many families we can serve effectively.
Great answer. last question here. When you look at the future of your firm, what is most exciting to you?
I think it's our young people. I think it's the team that we have hired that we want to transition into the roles we're in today, and watching them evolve, grow, and just become incredibly talented professionals.
I think that's the dream. Joel, I think that's it for today. This was terrific. You were incredibly succinct, which I very much appreciate. And I think our audience does too. And just give very original answers. And I think we're very generous with sharing your secret sauce. So it makes sense why you're so successful. And I look forward to tracking your growth and seeing all the great things that you and the team will do over the next few years.
Well, thank you much for the opportunity. It's been great.
As a financial advisor, you hold yourself to the highest standards of integrity, honesty, and credibility. You are successful because you take your professional responsibilities seriously and are dedicated to your clients. But are you living your best business life? Are your goals aligned with your firm's, or could a better option exist? Should I Stay or Should I Go is a book written with you in mind. It's a self-guided journey that walks you through the key steps that we take with our advisor clients. This strategic thought process and roadmap to professional self-discovery is designed to help you ask the right questions and think critically and objectively, whether you're considering change or not. Learn how to get your copy at diamond-consultants.com/thebook.